PSE index wavering between gains and losses. Now in the final minutes of trade for the day, it's actually down by up. Okay, it's up again by 0.02% or 2 points to 74.84. And joining us now to give us his take on the markets, Mr. Jomar Lacson, Head of Research of ATR Asset Management. Hi, Jomar. Thanks for joining us.
Hi, Mimi.
So, Jomar, Manny Lisbon of PNB Securities earlier told us that this year the theme was the end of low interest rates. And when interest rates starts going up, equities usually go down. How would you describe 2018?
Well, I guess that's more symptomatic of if I were to look at the main theme for 2018, it's really inflation. So inflation is the real cause behind the end of low interest rates. So Manny's actually right on that. But the key driver here is really inflation, wherein we've seen the impact of several effects, mainly higher taxes coming from Train 1, combined with an increase in oil prices. And of course, the strong growth of the economy has been driving also that the demand side. And I think this is where the central bank has now changed from its from a very I guess guarded or rather dovish approach to become more hawkish this year. So that changes sort of the environment which we've been used to for the past 5, maybe even 7 years.
Mm-hmm. So, Jomar, with inflation expected to ease next year, should we expect the markets to do better next year as well?
I think that's that's one of the factors that we should consider, that inflation has or is expected to ease. There are, of course, some still inflationary factors to consider, but relative to 2018, inflation should moderate, and that's good for the markets. But of course, there are other issues that the markets are concerned about, and I think the primary concern is still on the current account deficit, which, if at the current pace of our growth, is expected to widen further. There's a certain level that would probably cause some concern for investors. At the current level of around 2.3%, that's still okay, but in 2019, that's the one thing to watch out for.
Mm-hmm. So when current accounts are expected to widen further, I mean, this year some are saying that foreign investors punished countries with these deficits. So are we expecting that foreign investors will continue to stay away from the local market?
Well, it kind of depends on the effect on the peso-dollar rate. So that's actually where in the deficit, the current account deficit will be more, it's reflected. And if it doesn't, then I guess we can probably say that the concern may be moderate. So it's more of how it affects other price indicators that the central bank might actually act or choose to become more active in 2019, because expectations are that if inflation is moderating, the central bank might actually pause, and I think even some views that they might actually reverse. So that's the current view of the market. So if there's some pressure on the current account deficit for them to act, then that actually might be where the investors actually might see more risk aversion.
So what is the house call, Jomar? What is your house call on the peso? Because BPI Securities earlier this week are already telling us that they're expecting the peso to hit 56 to the dollar by the year 2020. What about you? What is your call on that? And how many more rate hikes are you expecting from the Bangko Sentral?
Well, we're maintaining a view of around 54.60, if I'm not mistaken, for the average for 2019. Now that's kind of hinged. I mean, that seems to be below what BPI might be expecting. But from our perspective, that assumes that the current account deficit will be around 3 to 3.5%. So it's not too much concern. But obviously, if we see the current account deficit move north of our expectations, then the 55, 56 may happen, but for us, our house view is pegged on around 54, 60.
And in an environment like this, market volatility still expected, the peso, of course, forex still hinged on so many factors. How would you advise investors? Should they go heavy on cash, heavy on fixed income for next year, for now, or go heavy on equities? How do they make money out of the markets next year?
I think, well, yes, you're right. It's actually more of the volatility. So if you're expecting more volatility in the equities markets, that would be a sort of like a wide range, trading range for share prices. So probably instead of being, you'd have to be a bit more risk averse, probably more concentrated in your portfolio, closer to the index, into the index weights. Yeah. So in terms of cash, I think that the mark that can depends on the valuations at this point, and actually again kind of depends on where interest rates are headed. So at this point, I think we're looking at around 15 to 18 times PE for 2019, which roughly translates to an expected index level around, I think around 8.5 year-end index target for us. So it kind of depends on where you want to position yourself. I mean, right now 7.4 it might seem attractive, but it's if interest rates are continuing to head up based on our a deviation from our house views, then we might actually need more cash to pick up at share prices at lower or more attractive valuations. So it kind of depends on that.
Okay, on that note, thank you very much, Jomar, for joining us this afternoon, and Happy New Year.